Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The negative vibes continue to weigh on the Australian dollar as the market price posts its fourth consecutive daily decline. Looking ahead though, today's schedule, the RBA Governor Philip is set to deliver a price stability, the supply side and prosperity speech at the annual Committee for Economic Development of Australia dinner in Melbourne. Besides the RBA levy, the roller coaster ride may pick up momentum when the US Federal Reserve releases the publication on Wednesday of the minutes from the November meeting, which could provide hints on its next move. Any hawkish surprises in the FOMC minutes could bring much volatility. Along with that, on Wednesday, the RBA NZ rate decision expects a 75 basis rate point hike, and that is from 3.5% to 4.25%. Looking at the technical though, we can see that the market is very close to the 60-day moving average, which is somewhere around 65.80. But I do feel the market could slip a little bit lower towards 64.45 before reversing and maybe even staging a correction back towards that topside call of 68 cents. Looking at the euro, the market adds further losses as the US dollar index, which measures the greenback strength against a basket of six major currencies, continues to hang around the 20-year highs at 107.46. Although this week will be a holiday shortened one in the US, with the Thanksgiving holiday on Thursday, investors or traders should remain alert as we will get another round of data on the US PMI reading, while the main spotlight will be on the US Federal Reserve when they release their publication of the minutes from their November meeting. Looking at the technicals though, the market still has a lot to do on the top side, and that is a clearance of 102.80.90 would reinstate the upside to 105. But until then, the market is still somewhat negative after the RSI broke for the midway point. So I feel that the upside attempts may dwindle and then eventually focus back towards the region of 101.30 and then reassess as a bullish correction could emerge from there. The dollar yen went into an accelerated mode after breaking the 140.65 level and now reinstates the top side anywhere from 143 to 145. As you can see, the market did stage quite a strong candle and therefore could continue on this upside trek, as I mentioned, to 143 to 145, with any pullback now sees or views support somewhere around 140.40.60. In light of how the markets have been trading, sterling is holding up better, and as you can see, still very much focused on that top side of 120. But I'm still allowing some error to my call, but the fact is that we could still see dips towards the region of 116.30 to 116.85 before the initial market ignites to the upside. As you can see, the market for the gold still remains somewhat heavy as it gets closer towards its objective of 1,726. Technically, the market's still breaking down, so therefore I still feel that any renewed gains towards 1,746 to 56 to foul, and therefore eventually see a retest of this bottom side here around that 1,726 and reassess. Finishing up with oil, the market plummeted over 5% and briefly stabbed the lows around $75 a barrel before posting a dragonfly doji to the bear candle, and still at this case holds a negative outlook due to the ADX holding very strong to the bear case. If so, the market needs to get above 81.80.95 to reinstate the bullish case. Otherwise, we can see another down test towards that $74 region and reassess. Well, that wraps it for today. Thank you very much for joining me. And as always, look after the intraday report, and I hope you enjoy the rest of the day.